I'm not necessarily a gold bug. I'm interested in the gold market, obviously, and I'll get into that in just a minute. But fundamentally, I think gold looks pretty strong. From a fundamental point of view, I'm on the bullish side, and you never exactly know what these central banks are going to do, but the trend is your friend, and the trend right now is a lot of central bank buying, and the reason behind that, I think, is that they're just simply a lot of uncertainty.
Steve Hanke, an American economist and professor of applied economics at the Johns Hopkins University in Baltimore, would not describe himself as a gold bug, a term frequently used in the financial sector to refer to investors who are extremely bullish on the commodity gold as an investment or a standard for measuring wealth. However, Steve recognizes how much of an opportunity the precious metal has become in today's world of constant and rapid money debasement, massive inflation, and poor monetary policies by central banks. Steve, a commodity and currency trader, warns that growing political instability and concerted and obvious move away from the U.S. dollar as the preferred currency of international trade make a very strong case for investing in gold. In addition, the popular economist points out that central banks have been accumulating gold at a record pace for over a year, a clear indication that they are seeking safety amidst all the climbing chaos and confusion. He concludes that this makes a strong case for owning gold, especially as we enter a new year amidst all the political instability and tension. This is why Steve is quite bullish on the precious metals despite not being a huge gold bug like the rest of us. According to the Johns Hopkins professor, the current setup for gold is just too good to ignore. During a recent interview with Commodity Culture, Steve discusses his outlook on gold, fiat currencies like the dollar, which he is increasingly bearish on, and the general deplorable state of affairs in the Western world. The popular economist recognizes that markets in the United States and the rest of the Western world are becoming less free due to constant interference and manipulation by central banks. He adds that the problem will persist and further worsen the state of things for as long as the apex banks and government continue to control the free market. We will now bring you clips from Steve's interview with Commodity Culture. Please watch the video to the end, share it with others, and ensure you click the like button for more videos. Also, ensure you subscribe to the channel and turn on the notifications bell so you never miss any of our videos. Thanks, and enjoy.
Everything has become more and more politicized in the realm of fiat money, shall we say, and as a result of that, the central banks are accumulating gold. Not big players in the market for some time, but now they are, particularly the ones that are in this kind of de-dollarization mode. They want to lighten up on their dollar exposure because the U.S. has so politicized and weaponized the U.S. dollar, particularly sanctions. I mean, since 9/11 and the war on terrorism has started, sanctions have just gone up, and now with Biden, they're really on steroids. They were going up very fast with Trump, by the way. So it's kind of a bipartisan thing. It doesn't have anything to do with political parties. It's just, I think it's utter stupidity on the part of the United States, but that's a reality. So you've got China buying big, even Poland. Poland was a big buyer in the last quarter, and Polish officials essentially said just what I was saying. So that's the fundamentals. Now, on the short-term aspect of gold, for me, of course, I'm long. That's as an investment. But now let's look at trading, because even if gold stays the same throughout the year, it's at the same price at the end of the year as the start of the year, it fluctuates around. And to pick up that fluctuation and trade on it, Abe Kaufness and I have developed something we call the Hanke-Kaufness Gold Sentiment Score. What we do every hour, we do text mining of all the articles on gold that come out. And that text mining that's done by computers determines, given a dictionary of words that we've developed, whether the article is bullish or bearish on gold. And if it's bullish, we get a high positive score. These scores go from +10 from the bullish side to -10 on the bearish side. So how do you trade on that? Well, you have to You have to develop algorithms that are connected to the sentiment score for trading purposes. And if the sentiment score goes way positive, let's say it's plus 4, 5, 6, that's bullish. What you want to do is either liquidate your long position in your trade or take on a short position, because we know that with a high probability of over 60%, that sentiment score will revert back towards neutral or bearish. It swings back and forth, back and forth. So you can be putting on, maybe even 3 trades a day. Maybe you're long, then short, then long again. And we've been doing this for a couple of years, and the performance has been quite good in like the 30 to 40% return per annum, depending on the algorithm.
During the interview, Steve discusses the irony of the often advertised free markets of the Western world. In a truly free economy, the markets, and not a group of 12 hardly qualified individuals, should determine the interest rate. In addition, central banks should not be responsible for bailing out banks and their wealthy executives during periods of economic distress. The official line is always that these bailout funds are not paid by the public, but we all know they are funded by tax dollars. They use the tax dollars of struggling families to bail out rich millionaire and billionaire executives, who, by the way, always manage to come up with very creative ways to evade these taxes. The injustice of it all is amazing. Let's get back to Steve's interview.
Industrial policy, they call it industrial policy, is where you have the government picking winners and protecting losers with subsidies and that kind of thing. So the U.S. has not really practiced open industrial policy. And now with the Biden administration, they've adopted explicitly, as of April, a speech that the National Security Advisor Jake Sullivan gave at the Brookings Institution. You can Google and find the thing easily. That lays out a new economic model for the United States, which is an industrial policy model. So that means what? The U.S. is going to copy what they're doing in Europe. I mean, and of all things, I mean, the French are even bitching about this industrial policy thing that the Biden administration is adopted. They say it's kind of over the top. So the U.S., I anticipate, is going to be in for economic trouble in the long run. This outsized increase in productivity and GDP that I've said over the last 50 years in the United States, that gap is going to narrow because the U.S. looks like it's moving in a position to kind of copy Europe, have more of a European kind of model. And this, I think, is going to end up being a disaster. It follows, by the way, logically, because U.S. sanctions are what? Sanctions mean that the government and politicians are getting in between a willing buyer and a willing seller. Well, that's sanctions. Now, what's protectionism? Protectionism is also the same thing, getting in the way politically of willing buyers and sellers. Now, if you accept that and you're comfortable with it, which the U.S. population seems to be with sanctions, because both political parties are all behind this. And Trump, by the way, who was a Republican president, he was very big on sanctions and protectionism. And now Biden is very big on sanctions. He's very big on protectionism. And he's adopted this overall industrial policy idea that just expands the scope for this kind of intervention. And it's very much a European way of looking at the economies. Some people call it interventionism. It's called industrial policy, interventionism, politicization of everything. So you can't do anything without the politicians approving or disapproving of the thing. That's basically the idea. So I think the days of Ronald Reagan, free market economics and so forth are really, the model has been tossed into the trash can of free markets, and now we've got the state being involved in virtually everything. And it comes in all kinds of things, but especially the green thing. Once you decide you're going to be green, you start adopting central planning and industrial policy, and the government knows best. Now, this is, of course, the stupidest thing. Just think of the economic incentives. A bureaucrat is deciding, or a politician is deciding how to allocate resources. They pay no cost for any mistake they make.
Policymakers bear no cost for their mistakes. That's why they continuously make very obvious and reckless decisions. Rich banking executives also know that when push comes to shove, the government will come in and rescue them, so they also make reckless decisions they would avoid in a truly free market. This insistence on reckless and stupid policies and decisions may very well bring an end to the financial system as we know it today. That's why prominent economists like Steve are saying that owning gold might just be the way out for us all. Please share your thoughts on the video in the comment section below. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to like this video for more videos on gold, silver, and other metals. Thanks for watching.